Friday, 6th of June, pre-market open, and as usual we'll look at UK wheat 2014 November contract, and we've got the weekly wheat chart in front of us, and you can obviously see quite clearly that we've had 5 red candles now, which is a big drop. Obviously we fell out this 154 beginning of the month of May, not a good month, and obviously all you can see here is this low here 142, and obviously you see this weekly candle testing it here. And we just zoom down into the daily contract chart, and you can see here that we've tested it now twice, this 142 level here. Yesterday, Thursday, we tried to break above the 5-day moving average here, and on Wednesday we closed below the 5-day moving average here. So obviously we're having a good old test of this level. What happens next? Basically it's either we go up £10 a tonne back up to fill this gap here, and we go back to 6-day moving average here, £154 a tonne, or this 142 breaks, and then we've got to move at £20 a tonne. Basically that will take us down to 120. How do I gauge this? By the move, by the reverse of the upside move. It's like a mirrored image, but obviously the market's heavily oversold. Volume has dropped off considerably, but we can't prejudge it. There's no magic formula I can see that you can say, right, this level is either going to break or going to hold. So I'm going to use the level itself. I'm going to watch for a close above the 5-day moving average. This is what happened in last February, the first day of February. It closed, that candle closed above the 5-day moving average. Then we quickly run up back to the 60-day moving average. And that's basically what I'm going to watch for. If it closes tonight above that, then I look for a run up here. But fortunately if we close below the 142 level, then alarm bells sound, and we're fortunately off and further downside. So obviously keep a close eye on it. I'll put alarms on the price here, and we'll just see the action. Watch the action tonight. Close will be important to see what happens following into next week. Obviously the forerunner to this is this big fall that's happened in the US. You can see it's just continued to fall all the way through May, down here, all the way down to the 630 level. We've quite interestingly come back to fill this gap here at 630 that was left back in March. We've got support down here just below at 610. It's interesting to see how this these markets always tend to refill their gaps here. Can't see any gaps left on the downside. There was one here, potentially a sort of break here at 680, but at the moment there's no sign of giving up. So obviously if this gives away, this gap gives away, we're looking further down here at 610. So there's no clues on that market at the moment to give us any sign of a bounce at present. And then just finally looking at the rate market, obviously we're still in this range. If you think back from beginning of January, we've seen a high of 138 and we've seen a low of 345. So we're back in a range here at the moment. Haven't tested the lows at the present moment. So obviously coming back, it's just key watching that the low on the November wheat chart, the daily one, 142. If that breaks, then obviously we look further downside, but obviously if we see a closing candle above the 5-day moving average, that gives us a sign of this run back up to the 60-day. And obviously I'll keep a close eye on it and put an update this time next week. Thanks for watching.